You know, when a company in the volatile energy sector beats expectations, you kind of have to take a look. But when they beat them big and also show a really clear path for future growth, well, that demands our attention. So today, we're going to unpack the very impressive 2025 earnings from energy giant ONEOK to see exactly how they're building all this momentum. So let's jump right into the big headline numbers from their fourth quarter. And honestly, to say they just met expectations would be a huge understatement. They absolutely crushed them. Okay, so first up, let's talk earnings per share. It came in at $1.55, which, is a solid 5 cents higher than what Wall Street was expecting. A really strong start. And it didn't stop there. On the revenue side, they also totally blew past the forecasts, pulling in over $9 billion. And get this, that's nearly $300 million more than what everyone was predicting. So this wasn't just a small win, right? It was a huge, decisive beat on all fronts. So, what's the engine behind these numbers? Well, it's just a massive operation. Seriously, try to picture this. A 60,000-mile steel river flowing right under our feet. That's their pipeline network. It's basically the circulatory system for America's energy. Okay, but look, any company can have one great quarter, right? That could just be a fluke. The real question is, can they keep doing it? And for ONEOK, the answer is a big, resounding yes. This performance wasn't some kind of anomaly. It's really just the latest chapter in a long, long story of steady growth. I mean, just think about this for a second. ONEOK has now posted 12 consecutive years of growth in what's called adjusted EBITDA. That's over a decade of navigating the ups and downs of the energy market. We're talking booms and busts, and still managing to grow earnings year after year. That kind of consistency, it's just incredibly rare in this business. And if you look at this 5-year snapshot, it really tells the whole story. Sure, you see some dips and bumps in there, that's just the market, big acquisitions, that kind of thing. But the overall trend, it's impossible to miss. It's straight up. They've now built their earnings up to a massive $8 billion in 2025. So, what's the secret sauce here? How in the world does a company in an industry that's famous for being volatile pull off such consistent results? Well, it's not magic. It's actually baked right into the way they do business. And it all comes down to this one key idea, their fee-based business model. Probably the easiest way to think about it is like an energy toll road. ONEOK makes its money based on how much gas and liquid is moving through its pipes, not on the wild fluctuating price of that energy. This acts like a huge shield against all that market craziness, and it gives them this incredibly stable, predictable cash flow. And they don't just put all their eggs in one basket. They apply this super stable model across a really balanced portfolio. So no single part of the business has to carry all the weight. Whether it's natural gas liquids or refined crude, you're looking at 85 to 90% of their earnings coming from those predictable fees. That's the real engine behind their financial stability. So in 2025, this whole strategy just paid off in a big way. I mean, they boosted earnings per share by 11%. They completely shattered volume records up in the Rockies. They successfully integrated brand new assets in the Permian Basin, which is a huge deal. And they even made massive progress on their environmental goals. It was just a textbook year of great execution. All right, so that's the story of 2025. But, in the investment world, the past is just that, the past. What really matters is what's next. So where is 101 going from here? Well, if you look at their outlook for 2026, they are not being shy about it at all. They're forecasting adjusted EBITDA to be somewhere between $7.9 and $8.3 billion. That's a pretty clear signal to the market that they expect the momentum from 2025 to just keep on rolling. So how are they going to get there? A huge piece of the puzzle is making smart, targeted investments. They're putting serious capital into major growth projects all over the place. We're talking expanding processing plants in key regions and beefing up pipelines to serve high-demand markets like Denver and the Texas Gulf Coast. And you gotta remember, these aren't just lines on a map. These are massive, super complex industrial assets. Every single new plant or storage terminal they build is a real physical expansion of their capacity. It means they can serve more customers and, this is the key part, generate more of that super stable fee-based revenue. But look, building new stuff is only half the battle. The really smart companies are always looking over the horizon, and that's exactly what ONEOK is doing. They're positioning themselves to catch some of the biggest waves of change happening in the energy world right now. So this brings us to a really important question for anyone thinking long-term. Where is that next big wave of growth going to come from? Well, ONEOK seems to have its eyes on three huge trends. First, there's the soaring global demand for U.S. liquefied natural gas, LNG. Second, you've got the AI revolution. This is creating this insane, unprecedented hunger for electricity to power all these new data centers. And third, there's this kind of rebirth in American manufacturing, which is bringing a lot of industrial demand back home. And this is where you really see the genius of their network. It's not just that it's big, it's about where it is. Their pipelines are basically a perfect bridge, connecting the places where the energy is produced directly to these new hotspots of demand, like the Gulf Coast for all that LNG exporting, and all these growing hubs where data centers are being built. And look, this isn't just some idea on a whiteboard. They are actively chasing this opportunity right now. They've said they're already in talks with over 40 different companies just on data center projects alone. Just try to wrap your head around that scale. The potential demand there is just absolutely enormous. Okay, so we've covered a ton of ground here, right? From the big earnings beats all the way to their long-term strategy. So if you had to boil it all down, what's the one key takeaway from ONEOK's latest report? I think it comes down to this really powerful mix of defense and offense. On one hand, you've got the fortress. That's their resilient, fee-based model that just keeps the cash flowing no matter what the economy is doing. And on the other hand, you've got the rocket ship, a really clear, exciting growth plan that's aimed right at the future of energy. And it's really that combination of stability and growth that defines ONEOK's momentum right now. So I guess the final question this all leaves us with is this. As the world's energy needs keep changing at this just dizzying pace, can this massive infrastructure company continue to be that critical bridge between the resources we have today and the demands of tomorrow? Looking at this report, they're definitely making a very, very powerful case that they can.